In Part 5 of Module 10 on budgeting and sustainability, we'll discuss budget execution and the post-audit process. Following budget approval, budget instructions are sent to the agencies that will execute its provisions. Budget instructions are usually rather detailed accounts of the goals and priorities of the agencies, relating back both to the statutory requirements and the county or municipal ordinances. Budget instructions and fiscal notes may include expenditure rates and goals, as well as the borrowing authority permitted for agencies. Some public agencies may be permitted to issue government bonds as a method of gaining resources. Budget execution requires that agencies submit regular and detailed financial statements and reports to political executives and to the legislature, demonstrating that expenditures comply with established policy priorities. If fiscal resources from another level of government come in the form of a grant, then budget execution may also include regular reports to granting agencies. At times, the agency's expenditures will exceed the amount budgeted to it. In the executive phase, agency budget administrators promptly alert political executives and legislators of possible shortfalls in needed resources. This relatively rare event occurs when there are either unanticipated problems, for example, a natural disaster, or a serious breakdown of administrative processes, and can result in mandated budget cuts or the identification of other sources of resources through new or increased fees, through tax rate enhancements, or through the sale of public assets. At the end of the budget cycle, public agencies are held accountable for their spending actions. The system of accountability that is used in state and local government involves either an independent or in-agency audit of the financial records of agencies. The purpose behind the audit is to ensure that public funds were spent in accordance with the goals and priorities intended, and to determine if any resources were misused or wasted in the process of carrying out the people's business. If an audit is positive, the fiscally responsible agency might benefit by finding its budget request funded during the next budget cycle. Conversely, shoddy record keeping and poor financial expenditure choices might negatively impact an agency and the provision of public funds for its priorities. In Part 6 of Module 10 on budgeting and sustainability, we'll discuss sustainable budgets and sources of revenue.